The only Bitcoin retirement strategy you need. In an era when traditional retirement strategies are being challenged by inflation and economic uncertainty, Bitcoin provides a tempting alternative. Bitcoin, being a decentralized digital currency with a fixed quantity, is increasingly seen as digital gold, offering both a hedge against inflation and the potential for significant growth. Bitcoin can provide diversification benefits by lowering total risk due to its low correlation with traditional assets. However, this novel technique necessitates a detailed understanding of Bitcoin's volatility, legal environment, and security requirements. This video will look at the benefits of a Bitcoin retirement strategy, including how it can help you save for retirement, as well as the risks and practical measures required for implementation. You can position yourself for a successful retirement by assessing your risk tolerance, selecting appropriate investment vehicles such as self-directed IRAs or Bitcoin ETFs, and implementing best practices to protect your assets. Regular portfolio evaluations and rebalancing, together with a well-planned withdrawal strategy, will guarantee that your Bitcoin investment is in line with your long-term financial objectives. Embrace the future of retirement planning with Bitcoin, balancing its tremendous growth potential with careful risk management. Let's delve deeper into each aspect of the Bitcoin retirement strategy, presenting more specific insights and considerations. 1. Understanding Bitcoin as investment. An overview of Bitcoin. Origin and technology. Satoshi Nakamoto, a mysterious entity, created Bitcoin in 2009. It relies on a decentralized ledger known as the blockchain, which records all transactions across a network of computer nodes. Security features. Bitcoin's security is based on cryptographic concepts and the blockchain's decentralized nature. Transactions are validated by network participants miners using a mechanism known as proof of work, making it incredibly impossible to change previous transactions. Scarcity and supply cap. Bitcoin's supply is fixed at 21 million coins. This scarcity is maintained by the Bitcoin system, which halves the reward for mining new blocks every 4 years, a process known as halving. Historical performance, price trends. Bitcoin has had significant growth since its creation, including big bull runs in 2013, 2017, 2020, and 2021. However, it has seen substantial corrections, losing 50% or more of its value in short periods of time. Adoption and acceptance. Growing adoption by institutional investors, corporations, and even governments has helped Bitcoin's price rise. Tesla's investment in Bitcoin and El Salvador's adoption of Bitcoin as legal tender have both been watershed moments in the cryptocurrency's acceptance. 2. Advantages of including Bitcoin in your retirement plans. Bitcoin is a store of value similar to gold, making it an inflation hedge. Its fixed supply differs from fiat currencies, which can be created in unlimited quantities, resulting in inflation. Global demand. Because Bitcoin is a digital asset, it is available everywhere, giving it a potentially greater hedge against localized inflation. Bitcoin has a low correlation with traditional assets, such as stocks and bonds, providing diversification benefits. This can help to stabilize your portfolio amid market downturns in traditional assets. Emerging asset class. Including Bitcoin can provide exposure to the emerging digital economy, which is underrepresented in established asset classes. The cryptocurrency market is still in its early stages and has considerable potential for expansion. Bitcoin's potential for appreciation remains high as acceptance and use cases grow. Institutional interest. Increased interest from institutional investors, such as hedge funds and publicly traded firms, may fuel additional price rise. 3. Potential risks. Volatility. Price fluctuations. Bitcoin's price is extremely volatile, with regular and sometimes significant price fluctuations. Investors with a low risk tolerance may find this volatility difficult to manage. Market sentiment, news events, governmental changes, and technological breakthroughs all have an impact on the price of Bitcoin. These factors might cause price fluctuations that are rapid and unpredictable. Regulatory risk and government policies. Governments all across the world are still drafting legislation for cryptocurrency. Future restrictions could have an impact on Bitcoin's legality, trade, and usage. Taxation. Bitcoin tax rules differ by jurisdiction, which might have an impact on your returns. Understanding the tax implications for your country is critical. Security concerns include hacks and scams targeting cryptocurrency exchanges and wallets. Using safe storage solutions and maintaining good security hygiene is critical. Loss of private keys. Private keys guarantee Bitcoin ownership. Losing your private keys means losing access to your Bitcoin, and there is no way to retrieve it. 4. Steps for implementing a Bitcoin retirement strategy. Evaluate your risk tolerance. Personal assessment. Consider your financial goals, investing horizon, and ability to absorb probable losses. A larger allocation to Bitcoin is appropriate for those with a higher risk tolerance. Advisory support. Consider working with a financial advisor who understands cryptocurrency to assess your risk tolerance and design an acceptable plan. Choose the right investment vehicle, self-directed IRA. Benefits. Similar to standard IRAs but allows for Bitcoin investments. Contributions might be tax-deductible or tax-free depending on the type of IRA. Custodians. Companies such as Bitcoin IRA, BitIRA, and iTrust Capital offer custodian services that ensure compliance with IRS rules. Bitcoin EVs offer easy access to Bitcoin without the necessity for managing private keys or wallets. They can be purchased and traded via brokerage accounts, just like standard ETFs. Options available. Examples include the ProShares Bitcoin Strategy ETF BITO, which follows Bitcoin futures, and the Grayscale Bitcoin Trust GBTC, which owns actual Bitcoin. Secure your Bitcoin. Cold storage. Hardware wallets. Devices such as the Ledger Nano S/X and Trezor provide offline storage, shielding your Bitcoin from internet dangers. Paper wallets. Generating and keeping your private keys on paper can provide a high level of security, but it must be handled carefully to minimize physical damage or loss. Reputable exchanges offer security measures. Choose exchanges with strong security measures such as two-factor authentication, 2FA, withdrawal whitelists, and insurance policies. Popular exchanges include Coinbase, Kraken, and Binance. Dollar cost averaging DCA is an investment strategy. DCA entails investing a fixed amount of money in Bitcoin on a regular basis, independent of its price. This helps to lessen the effects of volatility by averaging the purchase price across time. Automated solutions. Some exchanges provide automated DCS solutions which allow you to set up repeated purchases. Stay informed. Educational resources. Stay up to date on Bitcoin developments by reading books, following credible cryptocurrency news sources, and participating in online forums such as Reddit, Twitter, and Bitcoin Talk. Advisory services. Consider subscribing to cryptocurrency publications or seeking advice from industry specialists. 5. Monitoring and rebalancing. Regular reviews. Track the performance of your Bitcoin investments and compare them to your total portfolio and retirement plans. Modifications. Make modifications as needed to reflect changes in market circumstances, your financial situation, and retirement objectives. Rebalancing. Risk management. Rebalancing entails modifying your portfolio to retain the correct asset allocation. If Bitcoin's value rises dramatically, it may become a larger chunk of your portfolio than planned, increasing risk. Reinvestment. Rebalance by selling a portion of your Bitcoin and reinvesting the proceeds in other assets to stay within your goal allocation. 6. Planning for withdrawal. Tax considerations. IRA withdrawals determine the tax implications of removing Bitcoin from a self-directed IRA. Traditional IRAs incur income tax on withdrawals, whereas Roth IRAs provide tax-free withdrawals if certain conditions are met. Capital gains tax. Outside of retirement funds, selling Bitcoin may result in capital gains tax. The tax rate is determined on how long you've owned the Bitcoin and whether it's short-term or long-term capital gains. Withdrawal strategy. Timing. Plan your withdrawals according to market conditions and your retirement income requirements. Consider spreading out withdrawals to mitigate the effects of Bitcoin's volatility. Use trustworthy exchanges to convert Bitcoin to fiat cash. Be mindful of transaction costs and the possibility of slippage price changes during a transaction. Conclusion. In conclusion, adopting a Bitcoin retirement strategy can offer a unique blend of growth potential and diversification benefits that traditional assets may not provide. While Bitcoin's decentralized nature and fixed supply present a promising hedge against inflation and economic instability, it's crucial to approach this investment with a comprehensive understanding of its inherent risks. Bitcoin's volatility, regulatory uncertainties, and security challenges necessitate a well-informed and cautious approach. By carefully evaluating your risk tolerance and selecting suitable investment vehicles, such as self-directed IRAs or Bitcoin ETFs, you can strategically incorporate Bitcoin into your retirement plan. Employing best practices for securing your Bitcoin, including using hardware wallets and reputable exchanges, will protect your assets from potential threats. Additionally, regular portfolio reviews and rebalancing will help maintain your desired asset allocation and manage risks effectively. Stay informed about market trends, regulatory changes, and advancements in cryptocurrency technology will ensure you adapt your strategy as needed. Planning your withdrawals with tax implications in mind will further optimize your retirement benefits. Embrace the future of retirement planning with Bitcoin, balancing its significant growth potential with prudent risk management to secure a prosperous and stable retirement. Let us know in the comments what you think about this, and don't forget to like, subscribe, and stay tuned for more captivating content on our YouTube channel.